Dream Team video blog, market update, take 1. Hi there, thanks for tuning in to the Dream Team video blog. I'm Kara Harrison. For those of you who are joining us for the first time, be sure to tune in. Be sure to tune in to our 2 previous video blogs where we introduced you to the Dream Team, Mr. Chad McMahon and Mr. Ryan Morris, and where we talked about the philosophy behind the Dream Team, what makes them different and what distinguishes them from the competition, the services that they can offer you, the client. Today, we are going to be chatting about the market, the real estate market, and more specifically, the real estate market in Guelph and Wellington area. Now, gentlemen, what does that mean? What does that cover, Guelph and Wellington area?
Fergus, Elora, Rockwood, Push Lynch, Guelph, Aramasa, so it's pretty broad radius. Probably about a 20-minute drive in any direction, except for west. Then it's only about a 6-minute drive.
Thank you for that. So, gentlemen, what is happening in the market?
The market's pretty vibrant, actually. We are, as of the end of October, statistically speaking, we are down about 5% year over year.
For what?
Freehold detached homes.
Okay.
Unit sales.
Yes, total unit sales.
For
So,
freehold detached.
Yes.
And again, those statistics only cover what is actually sold,
Yes.
not what has been listed.
Right.
Okay.
Yeah.
Okay.
So overall
Down
sales
5%
are down about 5% from 2008,
Okay.
which if you watch reruns of our show, you will know that is, that's after probably about 8 or 9 record-setting years in a row. So that's actually a very good market.
But we're down 5% from that.
Yes. Yeah.
Can you put that into context for us? Should people be 5% is a big number?
Well, total sales is down 5%. So that's a decent number, but basically all it means is that.
And that's registered with the real estate board. That's not including new homes that are to be built, builder homes.
Well, builder homes are down quite a bit more, but that's a whole other topic.
Yeah.
But resale, residential, single detached is down 5%.
Why?
Mostly just because we had a really slow start to the year because of the media, of people that work at. Never mind, I can't mention it. Actually, it's our blog at Rogers and CBC and CTV. No, I'm just kidding.
But that's a really good point that you're making there, because I would have actually assumed that you were going to say because of what's recently happened in the economy, but you didn't say that, did you? You
No.
said because of the media. Why?
Because the economy hasn't really changed that much as of the end of October 2009 than the end of October 2008.
It's actually gotten better.
Which yeah, and what's happened is, but it hasn't gotten like dramatically better. It's getting better, but the overall shift hasn't been that dramatic. What is that dramatic is the media's perception of what's really going on out there.
It's coverage.
Right, and even more dramatic is the public's perception of what the media was reporting. Right?
So the reaction to it.
Right.
The chicken little theory.
Yeah. So originally, when the sky was falling, everybody abandoned the streets in November, December 2008, January, February 2009, even March to some extent.
Yeah.
Out of fear.
Out of fear. Yeah.
Now, some people were directly impacted from job loss and from, the auto industry. They were directly affected by that.
Yeah.
But there were a lot of investors at that time that were picking up on the low interest rates, all-time low interest rates, that were purchasing homes for investments.
Oh yeah.
Not only that, but the people that were going from home ownership and had to sell their house. We also have people that are moving into town from out of town. So there's support from other communities. We do have a strong university town here for investors to purchase other homes for, all of the kids that are 18, 19 years old that are coming to school to live in those houses. So because interest rates were so low, it was allowing people who couldn't normally afford to put 25% down on a home and hold an interest rate at a higher rate. The rates were so low, and they offer some pretty neat incentives now for investors to purchase investment homes with little or no money down and low interest rates to be able to now buy investment properties.
And that kept things
Yeah.
truthfully relatively stable.
Absolutely. So houses were still selling, and people were still moving up in the market because some people weren't affected directly by job loss. Some people were still getting promotions. Some people were still, getting new jobs or getting raises. And some people just weren't affected by it, and it It took a little while, but I think now people have realized that Canada is not directly impacted by what's happened globally. You know, and real estate's been so local, and Guelph itself, which is what we're speaking about, hasn't been that directly affected by it, other than what the media has done.
I think that's the key, that real estate is local.
Right.
Yeah.
Perhaps not speaking on an international level, but
Right.
real estate is a local issue.
Right, and whenever you watch the news, they don't spit out local numbers,
No.
they spit out
National.
global numbers, national numbers,
US
international
numbers.
right?
Yeah.
So they thrive on negative feed to the public and the consumer, and people watch it
You
because they
didn't-
can't help it.
But you didn't necessarily see that reflected realistically in the market here.
Not
No,
that much.
It was a great opportunity for a lot of people to take advantage of what was happening,
Yes.
and people who did are going to reap the rewards eventually if they
And
haven't already.
those that didn't, like Ryan said, a lot of people, even if they weren't investors, they then took advantage of the fact that, you know, the banks and the Fed were trying to stimulate the economy, so they
Yes.
drop interest rates and
Did
they
they
drop the
ever?
economy. So even if you're a first-time home buyer who's not really trying to invest in real estate, it makes more sense than renting in almost every case. You know, instead of paying 5 or 5.5 or 6%, you're now paying, you know, 3.5, 3.75, 4.
Which is
You know,
unheard of.
if you take a variable, you're paying
2.25.
prime minus, you know, in some cases, we've got a client that's paying 1.7 on a 5-year variable, you know? It's free almost.
Wow.
So there's a huge market there that wasn't trying to even take advantage of investment opportunities. It just thought now's the time. You know, if I'm gonna take that leap, now's the time to do it.
So did we even address why it's 5%, sales are 5%?
Well, yeah, because I think the negativity and the fear definitely slowed the market through the first
In the
quarter
beginning of the year.
dramatically.
Okay.
It was down over 20% by the end of March.
Mhm.
So the fact that we're at 5% now means it's actually risen about
It's positive.
20%, you know?
Yes.
So now, if you're out there, even though statistically the market shows that it's down, it's tough to get your offers in and accepted for much less than full price on well-priced homes or on homes in good locations. And that never did change, you know? So it wasn't, you know, this big real estate recession. What it was the speculating, I think, had stopped. People weren't overpaying for homes, but there's still plenty of people buying homes, you know? And actually, interestingly enough, the overall sales price of a home in Guelph, as of, you know, the end of the third quarter, is down approximately $1,000 from last year.
Oh,
So there's no real.
no.
I think you're right,
That's
yeah.
incredible.
So
Yeah.
that can change too.
Yeah,
So,
definitely. Speaking of rates, what are they like now? Okay.
It's prime at 2.25, 2.5.
Yeah.
Yeah, so I haven't checked today's rates yet, but we still get below 4%, I believe.
Yeah.
Wow.
Yeah, for a 5-year
For a
fix.
5-year fix.
Wow.
So
Incredible.
with variables, I know for a fact one of our clients just got a 2.15 on a variable,
Yeah, first time home buyer.
and that was this week.
Wow.
Yeah.
So if our viewers want to get more information on what the market's looking like in the Guelph and Wellington area, where can they get that information?
Best place to go would be www.thedreamteamonline.ca, or they can email us at info@thedreamteamonline.ca.
And if they'd like to speak to one, you find out?
Phone call's fine too, 519-836-6365.
Thanks so much, gentlemen. And please be sure to comment on this video blog if you get a chance. Thanks so much for watching.
Thanks.